Morgan Stanley is buying Solium Capital for $900 million. Solium Capital, based in Alberta, Canada, prepares stock plans for startup companies, and shares of Solium are up 42% today. So good for those folks. Morgan Stanley, it's their biggest deal since the financial crisis. First, do you like this deal?
Yeah, I think it's an interesting deal for three reasons. The first is that, so as you mentioned, Solium Capital is a Canadian company, and they provide stock plans for startups. So I think there's really three big takeaways from this. The first is that Solium provides predictability to Morgan Stanley earnings. So wealth management is a subscription division model for Morgan Stanley. This is sort of an easy plug-in for them. There's cross-selling opportunities. Also, there's, down the line, there could be retirement planning opportunities for these clients. So a lot of opportunity just from the get-go with this sort of acquisition. But then the second thing that I think is interesting is a while ago, or I guess starting in the beginning of last year, we really saw a lot of predicted mergers and acquisitions in the banking sector. And we're just now starting to see that sort of tick up. So last week we had the news about BB&T and SunTrust. This week it's Morgan Stanley buying Solium. And I think it's kind of an interesting time for this to happen because in the banking sector, you have a couple positive things going on right now. So you have a strong economy, widened interest rate spreads in comparison to recent history, lower credit losses, lower corporate taxes, and a little bit of easing on compliance. But for the negatives, regional banks used to compete with these much larger banks by just on relationships, really. And as people have moved more towards electronic banking, that's become less of an advantage. And you've also seen sort of these regional banks lack the technology that these larger banks have. So the consolidation makes sense. And I think we've all been waiting a while for it. So I think, this deal makes sense from that regard. And then the third part is really that it's a comment about startup culture in general. So clients at Solium have included Instacart, Shopify, and Stripe. So I think it could be an interesting sort of plug into Morgan Stanley's business to see maybe sort of like a relationship into IPO mandates potentially for Morgan Stanley, which is also interesting because companies have chosen to stay private so much longer and at higher valuations. I'm
a little surprised, or I should say I was a little surprised when I saw that this is the biggest deal Morgan Stanley's made in the past decade, just because Morgan Stanley, you're talking about a $70 billion business. So not that $900 million is chump change, but it's smaller than I would have bet on. But, CEO James Gorman was pretty clear about the fact that, and you touched on this point, pretty clear about the fact that they're looking to do more of these. They're looking to make more acquisitions. Yeah, and I think,
typically smaller acquisitions tend to go better. That's sort of the general consensus. So I think it makes sense. And I think this one in particular is interesting just because it sort of bridges that gap between private and public equities.
Yeah. The other thing I was struck by, so $900 million in cash, the buyout price for Solium is $19.15 a share. And when we walked in the studio, Solium was trading at $19.10 a share. So that tells me this is something that should go smoothly. And it's not going to be a situation like we've seen over the past couple of months where
regulators are fighting it.
Or you're getting also in the financial space, Visa and MasterCard sort of going back and forth battling for this British payments company, Earthport.
Right.
So this looks like Morgan Stanley's kind of got this one locked up.
Yeah, I think, part of that is just competition within this space. It's not necessarily as competitive as some of those other deals that you just mentioned, but yeah.